Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Last week we had the end of the month and the beginning of November, and as you can see, the previous monthly bar broke lower below the October low, below the September lows, and broke higher and managed to close above the previous all-time high. And the new monthly bar opened just above and immediately pushed higher, taking the October high. So on the monthly time frame, you have a strong development there, which can also be seen on the weekly and daily. You see that the week that just finished traded almost completely above the previous all-time high area, let's call it like that, and just briefly inside the previous week. And the daily, although it was consolidating for most of the week before the key risk events, managed to hold those gains around 30-40, and then with the non-farm payrolls positive market reaction, you gapped up and actually broke out of that 4-day balancing range, making new all-time highs and closing strong. So on the three main time frames that we keep monitoring, you have strong development and it's pointing to the upside. Here on the continuous chart, you see the 200 moving average, how it has been recently giving good support. Traders following or traders, participants involved are clearly focusing on this area or this indicator. You see how it bounces 1, 2, 3, then flushes below, stays below, tests above, go back, then recheck, another bounce. So it is an important reference to keep in mind. And what we see at the moment is that it's making higher highs. And we tried to go lower, but it went back up, higher lows, so it's pointing up as well. On the market profile, you see the profile for the day. The major data points to highlight here is that you see there's no excess at either extreme. So you have an incomplete auction at both sides, suggesting that at some point the market may trade at both sides. But for the time being, I would say focus on the upside, especially the focus for to start the week will be on the afternoon range, which is the L low and the MN high. You can see that that coincides almost to the tick with the halfback. So halfback would be the level denoting change. If you get acceptance below halfback, that will increase the odds of the market at least finding balance. If not, if you get acceptance within or above, well, let's focus within. I think it increases the odds that you will repair that poor high with no excess. Above obviously increases the odds of further upside, but if you open above and you create another gap, we need to be careful because the market could be getting too far ahead of itself. And remember that to the upside, we already have 3 gaps in place. There's another further gap somewhere down there. If I remember correctly, historically, I think there's something else. But in the recent trading ranges, we have 3 gaps to the upside. And you see clearly how the move was very sharp, then kind of slowed down, a little bit of backing and filling, consolidation, push, consolidation. So I'm seeing a lot of consolidation rather than a more, let me see if I find something like a more market trending stronger like this one. So we need to be careful because if we start creating gaps, the market could be getting too long and you could have a strong rejection like in your face. So wrapping up, market's pointing up, time frames are pointing up, incomplete auction to the upside, focus on the afternoon range, a halfback is the level denoting change, and trade well. Anything can happen, odds are just odds. We still need to hear details about when is the phase 1 China deal expected to be signed and further details of contents of phase 2 and what's the plan moving forward. Regarding the reaction to the non-farm payrolls, well, it seems that the market is strong. I would be a little bit careful because The market took it as a positive, but I would say that the stronger the economy is data-wise, the less the odds that the Fed is going to do something else. So apparently the market is not paying too much attention to that. But if the other market drivers fail, and I'm talking about the Chinese US deal and stuff like that, that goes down the drain, immediately the focus is on the Fed. And if the Fed is not going to cut anytime soon, then the chances are that the market may see a correction. So let's see what the next week brings. Trade well, manage your risk, and have a nice week.